Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. Recent moisture throughout the Central Plains will likely provide the calf market with a psychological boost in the coming weeks. But can the calf market move significantly higher than the premiums already in the cash market today? Values for 550-pound steers are around $5 to $10 per hundredweight less than a year ago at this time. However, it's important for stocker operators to look beyond what's going on in the current calf market as well. A 550-pound steer in Kansas is commanding a 28% premium over an 850-pound steer, a value difference of around $37 per hundredweight. Last year at this time, the premium was around 18%, or $27 per hundredweight. Relative to the current cash feeder cattle market, producers are bidding an additional $55 per head of margin into calves today that they kept in their pockets a year ago. Market fundamentals suggest much of the spring premium has already bid itself into the calf market relative to the feeder cattle spread. The spread will continue to grow into April. However, significant gains will likely depend on corresponding improvement to feeder cattle prices. And increases in that market will likely depend on deferred futures prices for live cattle to increase and corn futures values to decrease. Unfortunately, both of those markets are struggling to create momentum that would benefit feeder cattle market fundamentals. Finally, the margin environment for the feed yard segment remains negative, with many operations operating at a cash-to-cash loss for nearly a year. Sustained periods of losses in the feedlot segment are typically destructive to feeder cattle demand and present a risk to 2013 feeder cattle values. Current cash and future prices suggest a gross margin of $350 per head before accounting for interest and expenses related to pasture, health, labor, or freight. That should still create a comfortable margin to meet break-even projections and remain profitable. Stocker operators should consider hedging cattle early to secure profit margins and preserve equity in calves purchased during the 2013 growing season. The fed cattle market was fully steady this week. Texas sold for $123 per hundredweight, and light trade was noted in the north at $123 to as much as $124 live, and mostly $195 to $196 per hundredweight dressed. Kansas and most of the north has yet to trade at recording time. These areas were hit hard by a winter storm this week and are negotiating for higher purchase prices. Feeder cattle prices were steady to $2 lower on the week, while calves were mostly steady. Slaughter cows were mixed, ranging from $2 higher to $3 lower, and prices were weakest in the southeast. Overall receipts were light, and the feed yard segment losses continue to pressure feeder cattle values. Box beef was valued steady to weaker on choice product and slightly higher for select. Overall, demand for protein remains slow. The USDA released its monthly cattle on feed report today, and feedlot inventories came in at 94% of a year ago, with pre-report estimates at 93.8%. January placements were reported at 102%, with industry analysts anticipating 100.3%, and January marketings came in at 106%, while trade forecasts averaged 104.7%. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.